I'm Bambi Francisco with this segment of Lessons for Entrepreneurs, and I'm speaking with Jeremy Liew. He's a partner at Lightspeed Venture Partners. Jeremy, you've been investing for a couple of years. Share with the Vader community a few lessons on how to be a successful entrepreneur.
Well, that's a very broad question. Maybe I'll focus it on, say, 3 lessons on raising venture.
Okay.
One lesson might be to treat raising venture capital like a video game. You don't want to jump to the end, you want to level up. And so in the same way, the point of each step in the process is simply to get to the next step. So the point of sending an executive summary is to get a meeting set. It's not to explain the whole business. The point of the first meeting is to get a second meeting, to pique interest enough to have the venture capitalists want to have you back. Again, it's not to explain the whole business. If you think about what the objective of each step in the process is, it's a lot easier to walk up that staircase versus trying to jump directly to answering every question that you might have before people are ready to
How many
write a check.
meetings in this video game?
That really depends. I think oftentimes people should budget time in the 2 months range to raise capital.
Mm-hmm.
There might be a number of first meetings with a number of companies. Some of them will lead to second meetings, and some of them will lead to more expanded due diligence over time.
Do you have 2 other pieces of advice? I think you mentioned you had 3 for raising capital.
Yeah, another piece of advice is that not every company should raise venture capital, and oftentimes venture capital is a bad fit for that company, depending on how big that company can eventually get.
Mm-hmm.
A lot of venture capital firms have a profile for the sort of exit they like to be able to see.
Mm-hmm.
And so one example is Userplane,
mm-hmm.
Which is a company that I met with last year, and they were raising an A round. They'd gotten to very big scale. They hadn't yet sorted out their monetization. Userplane provides, on a software as a service basis for other consumer internet sites, chat, message boards, and instant messaging. And after we spent some time with the company, we concluded that it wasn't the right fit for us, and that perhaps they might be better off selling themselves to one of the big portals. They hadn't taken a lot of capital, and so there was a good opportunity for the founders to make a nice amount of money. Whereas if they took capital, then they were committing themselves to a much bigger exit in a much longer period of time. And ended up introducing Mike Jones, the CEO there, to John Miller, who was at the time the CEO of AOL.
Right.
The acquisition happened a couple of months after that.
Nice.
And that was an example where the company was looking to raise capital,
mm-hmm.
but perhaps that wasn't the best path for them.
Mm-hmm.
And there was a much nearer term opportunity for the entrepreneurs to have a good exit.
What do you say to entrepreneurs out there, or what's your advice to them if they don't even have access to the Sandhill Road venture capitalists? How do they raise capital?
Yeah, there are lots of ways to go about it. Friends and family, prominent business angels, and then if you're trying to get to venture capitalists, then oftentimes there are paths to them through law firms, through portfolio company executives and CEOs of those companies,
mm-hmm.
And through past successful entrepreneurs who can
mm-hmm.
provide referrals. So those are all good ways.
Okay. Or they can go on to Vader and find some other...
They can certainly do that as well.
Angel investors on Vader. Did you have one more piece of advice?
Yeah, and the third thing would be about matching what a investor brings to what you need.
Mm-hmm.
Money is certainly one aspect that every investor brings, but oftentimes investors bring more than that.
Mm-hmm.
And thinking about what those things are and how they match what you need, I think is one of the ways that that entrepreneurs can really get the most out of their investment base. So, for instance, if you're a media company and your background as entrepreneurs is more on the technology side, then you might want to look for an investor who can bring you a media perspective, so that you can make sure that you're going in the right direction. Alternatively, if you're really strong on the media side, and you've got the technology worked out well, but you're looking for help in hiring, then making sure that you're getting investors, whether they be angels or VCs or otherwise, who can help you tap into a big base of potential employees is another thing that might be important. So really sort of, and it really depends, it's case dependent, but thinking about what you need other than money from investors and making sure that you're selecting investors that bring those things.
Well, thank you so much. Great insights. Thanks, Jeremy.
You're welcome.
I've been speaking with Jeremy Liew. He's a partner at Lightspeed Venture Partners. I'm Bambi Francisco.